You will never again wonder if that spike is real. By the end of this episode, you will spot the exact 5-bar fractal that marks a swing high or low on M5, M15, H1, and H4. You will know when to wait and when to move. You will stop chasing candles that die right after you enter. This pattern is not a guess. It is a defined structure that Bill Williams built into his chaos trading system. Once you see it, the chart changes forever. Let me tell you who this is for. You are a retail trader who is tired of lagging indicators. You have tried moving averages and RSI, and they always confirm the move too late. You enter after the big candle, and then price reverses. You are not a beginner looking for a magic arrow. You are someone who wants to understand market structure on your own terms. The fractal removes the noise from your decision. You will know exactly where support and resistance live because the fractal defines them. This is for the price action trader who wants an edge on lower time frames. If you trade M5 for scalping or H4 for swing trading, this works. If you rely on news or fundamentals for every entry, this is not your tool. You need clean charts and a willingness to wait. The fractal forces patience. That is a skill, not a flaw. Now the walkthrough. Open your chart and set a clean candlestick view. You need at least 50 bars visible to start. First, identify a pattern of 5 consecutive candles. The middle candle must have the highest high for a fractal up. The 2 candles on each side must have lower highs. That is your self-fractal. For a bifractal, the middle candle has the lowest low, and the 2 on each side have higher lows. That is your standard Bill Williams pattern. You do not need to draw anything manually. Most platforms have a fractal indicator built in. On MetaTrader 5, apply it, and small arrows appear. The arrow points above the high for a fractal up and below the low for a fractal down. Why does this matter? Because it confirms a reversal, not a continuation. The fractal shows a change in momentum. You are not guessing. You are recording a fact about price. Wait for the 5th candle to close before you act. If you act earlier, you are guessing. The 5th close is your confirmation. Now here is the key step. Do not trade every fractal you see. On M5, you will get dozens. Most are noise. You must filter it. I use the Alligator to filter, but for this episode, focus on time symmetry. Check the distance between fractals. The best fractals come at the end of a strong move. Count the bars between the last higher low and the current fractal. If the move has lasted more than 15 bars on M15, the reversal is more significant. That is your setup. Next, confirm with the close. Look at the candle that forms the fractal. If it closes strongly away from the fractal high, you have a signal. Weak close means it is a trap. I wait one more bar after the 5th close. That bar should not retest the fractal level. If it does, the fractal fails. Why wait that extra bar? It saves you from fakeouts. On H1, that extra bar is 1 hour. On M5, it is 5 minutes. The time cost is tiny compared to the loss of a bad entry. Now, mark the fractal level with a horizontal line. That line is your stop-loss trigger. For a sell fractal, place your stop above the fractal high. For a buy fractal, below the fractal low. Do not move it during the trade. This is your risk anchor. The trade is invalid if price breaks through. Now let me run a real test. I used Eurist on H1 last Thursday. The market had been falling for 3 hours straight, from 1.0850 down to 1.0810. A fractal up formed at 1.0812. The middle candle high was 1.0814, and the 2 candles before and after had lower highs. The 5th candle closed at 1.0808, which was below the fractal body. That was my sell signal. I set a stop loss at 1.0820, 20 pips above the fractal high. My take profit was set at 1.0770, which was the next support level from a prior fractal low. The trade triggered and hit take profit in 2 hours and 15 minutes. Total gain was 38 pips. The risk was 20 pips, so a 1.9 to 1 reward ratio. On a standard lot, that is $380 for a $200 risk. The indicator caught the move cleanly. On the M5 chart for PUST, I tested a fractal low at 1.2650. The reversal gave 12 pips in 30 minutes. I used the same 5-bar logic. The pattern held on both time frames. The cost was just my platform fee, which is 0 on TradingView. Now the honest limits. First, the fractal is a lagging indicator by design. You need all 5 bars closed. That means you will always enter after the move has already started. On fast markets, you might miss the first 10 pips. I have missed full breakouts because I waited for the fifth close and the price ran away without me. That is the cost of confirmation. Second, fractals fail in ranging markets. If price is stuck in a tight range, you will get fractal after fractal, each one flipping the previous. You will get chopped up. Be careful not to push this into a consolidation. During the London afternoon the other day, the oddest went nowhere. I counted 11 fractals in 2 hours. Every single one was false. You cannot trade those. You should not use this. You should not use it if you cannot wait for the full formation. If you feel the urge to enter early, this pattern will punish you. Also, do not use it on time frames below M5. On M1, the noise is too high. The fractal becomes a random number generator. And if you cross multiple time frames, keep each fractal separate. Do not mix an M5 fractal with an H4 context unless you know what you are doing. That is how accounts get blown up. The obvious alternative is the zigzag indicator. It also marks swing points, but it does so retroactively. The zigzag redraws its lines as new price data comes in. That is its killer flaw. You think you have a swing high, and then price makes a new high, and the zigzag erases the old line. The fractal never redraws once the fifth bar closes. That is a massive edge. The zigzag also smooths all noise, which sounds good, but it hides small but valid swings. The fractal shows every micro reversal. You can filter them manually. The zigzag wins in one situation only. If you need a quick visual cleanup of a messy chart for a presentation or a macro view, the zigzag is faster. But for actual trading decisions, the fractal is superior because it is fixed in time. Your next step today is to load any pair, set the fractal indicator on H1, and mark the last 20 fractals. Do not trade. Just observe. You will see the pattern instantly. Once you can spot it blindfolded, apply the extra bar filter. Then come back for the next episode. Alligator lines as trend direction filter.